are going to take it a little bit further tonight by looking into something else. So we said that if in an uptrend, market goes this way, okay, let me use, so market goes impulsive, corrective, impulse, so impulsive, corrective, impulsive, corrective, impulsive. So we said that we should just imagine there's a imaginary point here that are key levels that market that is resisting the market and the market is retesting as a support. So that's what we are going to be.
Hello.
Hello, can you hear me clearly?
Yes, I can hear you, but please, before we go ahead, I'd like to ask a little question on based on the last class.
Okay, I'm listening.
There's something I didn't get right, and that was
Okay.
the time frame. The time frame. We discussed about the time frame. We discussed about D1 or H4,
Okay.
and you made mention that these two should be used in analysis.
Okay.
So I really want to know what D1 that is since there is a daily boy can't finish. Also, I really need you to go over it again and
Okay.
then tell me the importance of doing analysis on D1 over H4 or H4 over D1.
Okay.
What it's really I mean those things are very very important to take note while analyzing on the two time frame.
Okay. So basically when it comes to time frame, let me explain a few things. Now, if you can look at my screen, if you can see my screen very well, you see I'm on the monthly time frame. Can you see it?
Okay. Yes.
So what does that mean actually? That means every candle you see here, regardless of their shape and size, took a full month, a whole month to form, including this red tiny one. This is the current one we are. This is September 2020. This blue, it is still forming. So it means that every candle here is 1 month each. So what does that mean? It means from here, it means from here to here can be a whole year. That's what it means.
Really.
Now, let me show you exactly what it is. Now I'm going to do something now. Control Y. Control Y is period separator. What does that mean? It puts your chart into different periods. So if you're on the monthly time frame, are you following me?
Yes, yes.
If you're on the monthly time frame, every space between each period separator is a year. So in essence, this is 2020. How many candles? 1, 2, 3, 4, 5, 6, 7, 8. And this is the ninth candle for me. This is September, like I said. So this is 2019. This is 2018, 2017, 2016. So the space between two period separator is a whole year if you're on a monthly time frame. So if you take trade, if you do your analysis and taking trade on monthly time frame, you are saying that the trade you take now, you might not close it until December. Because let's say you want to take a trade somewhere here. Let's say you took a trade somewhere. This was supposed to be March. Let's say you took a trade on March, and this is your TP, your day profit. You're going to be closing that trade in September. Now, and I'm sure that you are not that kind of trader. You want to be a day trader, someone that can enter the market and take money out in a day or in a few days. So, in as much as sometimes, once in a while, we look at the monthly time frame to see the general direction of the market. but you are not advised to trade on monthly time frame. Why? Because I mean, it's just like you want to kill ants. You now want to go and carry a double barrel. It's just, I mean, it's overkilling. Are you getting my point?
Yes, yes.
Okay, so let's go to the weekly time frame. Weekly time frame is almost the same thing as monthly time frame, it's just that it's larger. And then before I jump over, let me go back to the monthly time frame and show you something. If I use my crosshair, can you see this cursor thing here, this plus sign here?
Yes.
Now, if I drag it over 2 points in the period separator, you will see what I'm talking about. So can you see 12 on the cursor? Can you see
Yes.
12 on my cursor?
Yes.
It means 12 candles. And since every candle represents 1 month, it means what? 12 months, right?
Yes.
Aha. So let's continue. Weeks, weekly time frame. It means every space within two period separator is a year also, but let's confirm it. Let me bring out my crosshair and then drag it. Where is it again? So can you see 52?
Yeah.
52 weeks makes a year. Am I right? Am I right?
Yes. Yes.
Okay, so the space between two period separator in a weekly time frame is also a year. So this is 2020, this is 2019, this is 2018, 2017, 2016. So now let's continue. D1, let's zoom out a little bit. D1, what is the space between two time frames? Let's check it out ourselves. Now, since every candle is 1 day, we have 22 days. That is a month. Why? Because market only open 5 days a week. 5 days in a month, I mean 5 days in a week. So in this particular month, market open 22 days.
Okay.
In this particular month, this market open 24 days. And the month we just finished, which was August, market open how many days? 21 days. So this is a month. So within two period separator in a daily time frame is a month. So if we continue our journey, go to H4, between two period separator in an H4 is a week. How do you know? Since each candle is 4 hours and we have 30 candles here, calculate it. 30 times 4 hours. By the time you divide that by 24 hours, you will get something around 5, most likely. Let's even do it. 4 times 30.
22. 120.
30 times 4, that's 120. 120 divided by 24 hours. That's 5. 5 days a week. So H4, the time space between two period separator and H4 is what? 1 week. Let's continue. What is the time frame between two period separator in H1? 24 hours. Because each hour is what? Each candle is 1 hour. So we have 24 candles here, which means 24. And then we can keep going and going and going like that. But then why am I doing all of that? I want you to understand something. Hold on a bit, please. So I want you to understand something, and this is it. For us to predict what is going to happen next in the market, We need the data of what has happened in the past. But the question is, how far in the past is useful? Like I said, if you want to kill a ant or mosquito and we carry a double barrel gun, we are going to kill more than mosquito. So if you are just going to take a trade, which means you need to master where the market is going to go in the next 4 to 6 hours, and you are busy looking at the chart of what happened on the monthly time frame, you are going to overkill the market. You are going to overkill the situation and probably get yourself confused. Are you following me?
Yes.
So now, as a day trader, which you and I are, that is, we enter the market daily to pick a position, take profit that day or next day or so. Now, what you need to do, where you need to really play is 4 hours, because you want to take profit within a week. But then the reason I mentioned D1 again is because D1 is stronger. Why? Because if you look at D1, what happened within a D1 time frame is what? A month. And then whatever key level you identify, so I'm going to be speaking about key level today so you can relate it together. Whatever key level you identify on D1 is stronger than whatever you identify on H4 downwards. So let me give you an example. If okay, let me give you this example. If Nigeria Army decide to do a roadblock somewhere with guns and everything there, I'm sure that none of us will want to even go there to start telling them why we need to pass, because of the fear we have for the Nigerian Army or soldiers generally in this country. But then if it is Nigerian police, if it is Nigerian police, we might still approach it a little bit and say, last, we will discuss or drop something for the boys or something. Are you following me?
Yeah.
Now, let's leave from Nigerian police. If it is, say, FRSC cops, if you say, if I have my papers, there's nothing to fear, let me just go. Now, let's now come down to Boy Scout or Man o' War. You will not even bother yourself to think about if you want to pass or not. You will just keep driving. Am I right?
Yeah.
Now in that format, now look at it as the Nigerian Army is a monthly time frame or weekly time frame key level. You saw a key level on a weekly time frame. You can almost be sure that market will not break it. Why? Because it is hardly going to happen unless there's really a tsunami. And let me show you an example of that. Now, let's say, for example, this is one. This is a key level because market touched it here and came back. And then let me also tell you, the last time market touched it was when? Was 2016. And the market never got close to it until this year again, 2020. And then market did not even touch. If you see, there's a little space between it and the line. Did you see it?
Yeah.
Market did not even touch the price before coming down. So it's the same way you see a road blocked by Nigerian Army with guns and everything, and you just turn back straight without even getting close. Even if you are not the one they are looking for, you don't want to get involved. You just turn back straight. Now, but if you go to D1 or other time frame, it's like the Nigerian police roadblock. You will get there, you will see stretch out your neck, officer, how na day? Because we really don't. That's more like the key level drawn on D1 or lower. It is strong. Yes, it is strong. But then it can get broken at any point. It is not as strong as the one we draw or the one we notice on monthly time frame or daily time frame. Now let's now give an example. Let's say you now went to draw a key level on 15 minutes. That one is like bus scout. Even someone that is riding keke, you cross over the roadblock. You don't even need to be driving a car. If they call, you will not even answer. Why? They don't even have any ammunition. They can't do anything. Are you getting my point?
Yeah.
So the question is now, if you see a key level on D1 and you are trading H4 and market is approaching that key level, you are supposed to be adapting yourself to be able to expect market to turn from that key level. That's why we always interchange those two time frame, H4 and D1. So what I do is, if I want to be, and then some people do it to be safe, some people will draw their key level on D1 and then label it.
Yes.
I will show you how to label it. They will label their key level and then go to H4 to continue their trading. So that when market approach their D1 key level, they can know that Egungun, be careful. They can tell their Egungun to be careful because they know that this is a solid key level and it might hold. So the question is, what is a key level? Let me start from the beginning. So more like I went to the introduction. Let me now start from the beginning. So what is a key level? But have I answered your question, Sheon? Sheon, have I answered your question?
Yes, you've answered it. But then
Okay.
I had wanted to ask that what was this vocabulary you are using? Key level, key level.
Okay.
Now
So
I think you are ready to answer it
yes.
fully.
So what is a key level? And then I make bold to say that key level is the most important thing in the market. So for people that just joined, welcome. How's been your weekend? Can you hear me clearly? Test the audio on your side. I need to be sure that you guys cannot hear me. Bolu, can you hear me? Joseph, can you hear me? I need to be sure you guys can hear me. Drop a message on the chat box. Let me know if you can hear me clearly. Now, that said, what is a key level and why is it so important? Every time you look at your chart like this, of course, I tell people to zoom all in. Every time you look at your chart and see price retrace from here, and everywhere price have retraced before. Now, they didn't just retrace there. They didn't just retrace there. It is not magic. It is not automatic. They just have to retrace there. So now, there's this saying in the market that history always repeats itself. So if price have retraced from a point in the past, it may likely do the same in the future. So, but then, because market always have that memory, market has memory of where it has retraced before, but you don't have that memory. So how do you how do you make sure that you notice where market have retraced before, since you cannot see all your chart at once? And that's why we um, brought up the idea of clicking or drawing lines. Some people draw lines, some people draw small rectangle and color it. Different ways to do that. So if I want to do that, I'll say market has turned from here before. So market has turned from here before. So turn from here before. Turn from here before. So we just draw lines to mark where market has turned before. Then we can now zoom in a little bit more to adjust our lines so that it can fall in the right places. So like this, for example, I'm going to drag it down a little bit. This, I can drag it up or down. So what determines where I'm going to drag them to? It's one thing that makes your key level valid is this. How many points how many times has price touched them before? If you have 2 points, you have a good level. With the third point, you have confirmed the level. So what am I saying? So the question is, why am I now putting line where there's just one touch? Now, the answer to that is this. For you to have this touch, there must have been another touch in the past, and I can prove it to you by going to a higher time frame. Can you see it? There's another touch here. So just look at it. There will be other touch somewhere, but make sure you locate it. But then by the time you get better in drawing key level, you will not bother looking for it, because you know that for price to have turned it at that particular point, it must have turned in the past. So once you locate a point that has 2 to 3 points where price has returned before, draw a line there. So you can draw a line, you can draw a small rectangle like this, insert shape. Okay, let me put that here. So I can put a small line like this. So it all depends on how you want to indicate your key level. Now, and then the reason many people love to use shape, rectangle shape instead of line is because now drawing line makes some people think it's a key level is a definite price. That is, for example, this one is 1.4664. And that's why they prefer to draw lines. And they prefer to draw shape. A key level is not a definite price. It's a price area. So if the best price to buy a particular commodity is 5,000 naira, you can be sure that not everybody will buy it at 5,000 naira. Even if we are targeting 5,000 naira, many of us will buy at 490 something. Many of us will buy at 5,100 and something, or 5,000 something. So it's not a definite price, not at all. It's price can turn before it, price can turn slightly above it, but then you need to know that it's that area of price that price will definitely turn. So that said, you need to learn how to now adjust them once you have drawn the line, to adjust them to be able to fit into where there's more points. So let's go to another chart and show you same thing. So let me do H1 or D1 here. So look at this, for example, 1, 2, 3, 1, 2, 3. So there's a three touch here. And if you can see, there's also a touch here. Market came down to touch it and went up again. So we can see that it is valid. So continue. There's another touch here. There's another one here. In fact, there's another one around here. So, and then obviously there's another one around here. So are you now saying that every time I open my chart, I must draw every key level I can see on my chart? No, it is actually not needed. What you need to focus on are the key levels that are closer to where price is. So for example, where is price at the moment? Price is this gray line, the 71392 line. So the kind of key level I want to draw here are this one, this particular one I drew here, and then maybe the one above it, the one, if I can find another one close to it, maybe below it, something like this, then I'll be cool. So I can go to lower time frame to adjust my key level, just to be sure that, to make sure that they are in the right places, to give me an idea of what price can do, or what price it will do. So I can, so there's no accurately correct way. You just adjust as you go. So once you've done this, it helps you understand where price has been and where price is likely going to go. So before I proceed, I need to be sure, do you understand what I've done so far already? Drawing key levels on the chart before I proceed to the next level on this. Um, Use the chat box. Do you understand or do you have any question based on what I've taught so far before I continue? I'm waiting for your responses. Joseph, you came late. I already explained that, and I think I even did explain that when when you already joined the class. So you will have to watch the video. Everybody knew this class was going to start by 8, and I tried calling you, which I shouldn't even do, but I did. So Bolu, you two don't understand, so you have to come early the next class. You watch the video. Sean, do you understand? Okay, so let me go over this again because I just explained the first part. I need to explain the second part. Now, on a general level, let me open a different chart entirely. If an investment banker look at a chart like this and they want to trade it, what are they looking for? They are looking for a price. Please, if you don't understand, listen to me. I'm going over it again. They are looking for a price where, okay, let me just use a common analogy. Now, as we are all citizens of Nigeria, the price of fuel is going up. Now, currently around, I can't even remember the price I bought for, was it yesterday? I can't remember, but at least they just increased the fuel price, the pump price. I mean, it's very not too long ago. Now, we can still buy now, but let's say they increase it to 200, 250, 300, and the price was now selling for 500. Maybe we will still buy now, but you agree that it will get to a price where we will all agree, not because we came into a meeting or an assembly, but we will all agree as Nigerians that the price of fuel is too high. Now, currently, some of us believe it's too high, but not all of us. That is the truth. And that is some people still defending the government on it. Now, but it will rise to a price, let's say it rise to a price, we will all believe and accept without anybody arguing it, that price is too high. Now, it is that kind of price. It is at that kind of price that sellers, in quotes, because buyers push price up, sellers push price down, and that's one of the things I discussed in the last class. If you didn't watch that video, please go watch it. So buyers push price up, they are the optimists, and then sellers push price down, they are the pessimists. So now it is when price of a commodity or currency pair get to that height, and that's where people that want to sell, that believe price will come down. So when we have so much people believing price will come down, and then they are not just believing it, they are ready to put their money in the market to short the market, that is, make the price come down, that's when price comes down. So it is that kind of price that we call key levels. That is, key levels are prices in the market where something must happen. So if price was going up, Joseph, I'm not talking about any indicator. Just relax. We are not talking about any indicator here. Listen to what I'm discussing. So it is that kind of price. It is at that kind of price that price. You just confused my thoughts. Now it is at that stage in the market that everybody believe, or most people believe, price should come down or price should go up. So when price get to a level, something must happen. If the price level is on the down part, if price keep falling, now for example, as valuable as gold is, so as valuable as gold is, if gold keep falling in price and it get to $10, which can never happen. Now, all of us, we believe that gold is too cheap. Everybody will want to buy. This